weekend all. I'm Epstein, and here we are with your metal market wrap-up. And this is your weekend edition where we're going to look at weekly charts and try to get a feel for what the markets are doing, what they're telling us. We start off the first thing with some news in the morning. At 7:30, we have two reports. The New York Fed Empire Manufacturing Survey, that comes out at 7:30. Then we're going to get advanced retail sales data for February. That comes out at 7:30. The National Association of Home Builders, their monthly market housing index, that's at 9 o'clock. And then we're going to get the January business inventory data at 9. This is all in lead up to the two-day FOMC meeting where we'll see the Fed come out, give us their dot plots. I'm not convinced that the March dot plots are going to be as important as people think. I think the June is, because by June, the Fed members will have been able to see what the reciprocal tariffs are. Did they go into place? How severe were they? And they can give you some judgment with that as to what they're doing. Right now, I think they're as confused as everybody else. And because of that, I think that from each speaker that spoke, you remember there's a blackout period before this meeting, but prior to that, they want to see what Trump is doing before they try to figure out what they should do. And I don't see that changing. Although over the weekend, people are saying how important it is. What's important? They don't know what they can judge on yet. They can give you a guess, but I think it's June's that'll be the more important one. And by then, by the way, you might see them make even a cut if they feel that the economy is getting hindered in a big way. Over the weekend, I woke up this morning early and I'm watching the national news, and I forgot, I think it was NBC, but I'm not sure. They had an analyst on, and I'm not talking Bloomberg, I'm talking, the regular morning, big news, national news. And bingo, they're talking gold, and it's 3,000. I give the woman credit because she told people this is highly speculative. You only put 5 or 10% of your assets into it. It's running because people don't know what to do. The stock market has changed its notion as Trump has come in because of the tariffs. Are we headed to a recession? Aren't we headed to a recession? You have Lutnick over the weekend. Again, that's our Secretary of Commerce saying he does not see a recession on the horizon. And I hear other people say the same thing. But to a person, they see slowdowns and bumps to the downside now. And that's what I think you have to deal with. And that's what's bullish gold. On a monthly basis, this is a monthly chart of closes only. We're up so far for the month. We're halfway in, 5.36%. On a weekly chart of closes, you're up more than half of that, 2.99%. You were up just this week alone. So you made up an awful lot of that just in 1 week. And as you could see, you're now at the 3,000 level. In terms of swing line performance, where swing lines are another way of me helping you to see is the market trending via the traditional parlance of an uptrend having higher highs and higher lows, a downtrend, lower highs and lower lows, and a market that's got nothing going for it has got a higher high and a lower low, or a lower low and a higher high, depends on the sequence, but they're not moving in unison. Here you are. You've had higher lows, higher highs. That's bullish until the market gets back underneath this last low of last week. And that last week's low, I'm not talking the week we just went into, the week before, was 28.6630. That's the number on a charting basis that would break the pattern of higher highs, higher lows. The market is over the 18-week average of closes. If you'll recall, if you've been watching, I told you back here. I said, now the market's deciding what it can do. I came out here in these videos and said that I thought we would hit 3,000 this year. And I said this back over here, and I've got the videos there. Bingo, we've hit it, all right? Whether you caught it, didn't catch it, it's immaterial to me. I thought the market could run, and I got to the number purely by guesswork. Just looking overall and saying, okay, there was some price count work that called for that, but more or less I thought the things Trump would do would just carry the market, and since you were already in that 28.5 zone, why not add a little bit to it, easily 5% or more, and that's where you're at. Do I know if it can keep going? Don't know. All right, want to see what happens. Certainly if everybody gave in on Trump tariffs, in other words, the countries that we're going to have reciprocal with, if they came to the table instead of fighting them, and said, let's talk. We want to lower our tariffs, you lower yours. Gold is overvalued. If they don't and they fight, gold has higher to go. That's my viewpoint on the gold. As I look at the market here, I can see the market running to the upside. By the way, I'm not worried about Iran taking on the United States. If Israel could do the damage they do, we didn't even give them the big bombs that they've just gotten, and what else do we have in our arsenal? Not worried about them in the United States. I am worried still about the Houthis. I'm worried about Hamas not getting a deal done. I mean, these are humanitarian things. But Trump isn't Biden, and he will let loose the armed forces in a different way than Biden had the restraint of, and you're seeing that. Higher lows, higher highs, running the Bollinger Band, that's bullish. It's embedded the reading. Breaks in this market, I think will get bought by the pros until the slow stochastic, this red line that you see, closes under 79. Until then, as the market keeps going, why not new highs? But I advise my clients, my subscribers, that I don't believe in buying over a Bollinger Band. Now, you might say, well, had I done that, I'd be there. And I agree. But if you go back and you look more times than not, it's not the best thing you could do. Buying under the band is a whole different ballgame. When I look at the gold-silver ratio, gold has been stronger than silver. It's starting to slip and fight its battle. It closed at 87.78, the ratio, just over the 18-week average of closes. When you look at the silver, it's over the upper Bollinger Band. Is this going to be a breakout? In order for me to call it a firm breakout, you need another week, this week, where you take out this week's high and you close just like you did this week at the very top part of the week's range. Higher close, higher there. Then I would say before you get back under this low, let's call it just for sake the 2,900 zone, you're marching up, and I'll give you some numbers on that. I might even do a silver report as a special report. I'm debating about it now. In the copper market, well, this is, as you know, based very much on what China's doing. Now, this weekend, China came out with more of the grand plan from the National Party Congress, and what they said was they want the consumer to buy more. So my question is, how? The consumer's petrified of their real estate market. That's got to shore itself up. And saying they want them to consume more, I'm going to go back to it. How? Why would they do that? And they don't give the answers. They want the different regions where they have the different governors in to all get that to happen. I'm telling you what I read. I imagine there's a way, but I didn't read what the plan is. The plan is to get them to spend more. How wasn't answered. In the platinum market, well, you got a higher high. Then you came down 2 weeks ago, took out this low, and now you're back up. The key is the market cleared. Again, the gray line, which is the 200-week average, the 100, and 100 in green, and the red, the 18-week average. This is all constructive to the market. It's difficult to be bearish. It doesn't seem to want to stay under that number. And in the dollar index, you have fallen apart. That has given gold more buying power. So if you're a foreigner and you want to buy gold and it's priced in dollars, if your currency went up against the dollar, you can buy that gold at a cheaper currency rate because you got to convert back to dollars in most cases. That doesn't mean that it's not, but gold universally is priced in dollars. With that, I'm Ira Epstein. I do want to remind you to join me first thing in the morning and join us with our combo package for our subscriptions. What this is I cover at 6 in the morning and again at 9. 6 in the morning, only the futures. I look at 40 different charts plus, weekly and daily. I give very specific. I want you to buy here. I want you to sell there. Here's where a stop order is. Here's where I think the market is going. It also includes my free special reports. Clients that aren't ours and get our special reports, they very quickly see that they get no more views than 2 a year, and then they have to pay for it, almost what a subscription is. And I'm going to raise the price on the special reports. Want you to be a subscriber. I think that all I have to do in the course of a month is get you either help with your trade ideas, give you a reason that you're pulling your trigger. I manage no one's money. Therefore, you're getting from me an analyst that's got 50 years experience. Yeah, 50 years experience plus. Doing this, seen the game, and my idea is to throw ideas at you. Not interested in day trading, very interested in swing trading in the futures. There's a huge difference there. If a great trade develops and you can hold it longer and longer, great. But 90% leverage in futures markets, that's trades happen quicker than they do in the stock market and end quicker. Just the nature of the beast with that leverage. I'm Epstein. Hope you join us. I will catch you in the morning.